Hey, good morning, everybody. It's Brian. Hope you're doing well today. It's Friday and last day of our trading week. Let's go ahead and get to it. It's going to be a really quick message this morning. We've got some news coming up, which is going to affect what we're doing in Forex. And then we'll hit our key levels quickly in futures and then let you guys roll from there. So let's go ahead and get to it. I'm going to switch over to this screen right here. What news am I talking about? Well, a couple of things coming up. The announced news, the news that's coming up here at 7:30, which is 8:30 Eastern, so about 30 minutes from now. We've got core retail sales and retail sales reports on the USD. So this could be impactful to us for a couple of reasons. Obviously, in the forex side of things, we haven't seen much movement. Excuse me. Dang it! What's going on with my throat all of a sudden? Haven't seen much movement this morning so far in many of our USD cross pairs. So there's certainly opportunity for us there to really see if we have a fairly large delta between what was forecasted over here and what actually comes out. That could be a driver for movement there. So, from the Forex side of things, we're going to sit on our hands because we don't want to trade coming into that news event. It's only 30 minutes, right? So from the time the market opens until news, there's not really a lot of time for price to do much of anything, as far as at least as far as getting us into a decent profit on our breakout. Certainly news could be a catalyst that drives price direction, but why take the gamble? Let's let news come out, do its thing, and then after the market returns to normal following the announcement, we can see what currencies are actually moving, pair strong currencies against weak currencies, and trade from there. Today is one of those days, just kind of watching what's happening this morning. We've got the pound as not the pound, the euro as a stronger currency here. So it's a currency moving to strength. It's being bought a little more heavily than the others, as is the CAD. And then we've got the yen and the USD, both as weak currencies. The pound was looking like a decent, strong currency, and we had a tweet just a few minutes ago from Mr. Johnson that put the pound right at the floor here, started selling off. Just some additional updates around the Brexit talks and what the deals might look like. So the pound sold off pretty heavily on that tweet. Again, emotional, just like our move in the markets 2 days ago was emotional. It was driven by a tweet, an announcement about the CARES Act, and all of a sudden, the indexes just kind of crapped out for a minute. Totally an emotional move. Doesn't really change anything with what's truly happening in the marketplace right now. But with that said, the pound certainly retreated quite a bit here. Now, the pound could even give us opportunities as well post news. So let's let the U.S. news hit its thing. Let's let this announcement happen at 7:30. More than likely, leading up to this announcement, especially because we've got some CAD announcements as well around the same time, more than likely leading up to this in the minute or two ahead of it, we'll start to see spreads widen. And then on the announcement itself, spreads will probably widen even more. Market will go a little bit crazy, and then 2 to 3 minutes after, spreads will come back down to normal, and we'll see what the actual direction is at that point. All we're going to look for is to see post-news which currencies actually have the activity. Is the pound being, is the USD being heavily bought or sold following that news announcement? What's the yen doing? The USD and the yen usually trade fairly lockstep. They're usually right with one another. So we can see what's the USD doing, and then see how that compares to other currencies. Maybe the pound at that point starts moving back to its upward trajectory again, and we could potentially pair together the pound and the USD, or maybe the euro really is on the move at that point. We can pair together the euro and the USD. Both have ample opportunity at this point for continued moves just based on their current ranges. So, but really everything there remains to be seen until after news. There's really not anything to do until after the news comes out and we actually find a direction for what's going on there. All right, moving over to the futures market. I mentioned we had a little bit of a rebound yesterday. This was the emotional sell-off that we had following that announcement about the CARES Act. There's a lot more upside potential here. You know, just basically market rallying on exuberance around you know, the potential of that CARES Act being ratified and being done. So, you know, we're back to a long trend following yesterday's move back up. We're back into a long bias. The 4 hour is long, the 30-minute is long. It's just barely, but it's long. So, you know, that's telling us right now that we can look for long trading opportunities. What does that look like for us? Well, you know, the next level up is 34.90 over here, this 34.90 area. So we could look for breaks above 34.90 if you're just looking for a breakout trade. You know, so we could look to go long if price pushes up, breaks above 34.90. I'd protect profits a little bit around 3,500. You know, maybe just ratcheting up to, you know, break even or a level plus break even, because I think around 3,500 there's going to be some potential for a pullback there. But, you know, that'd be the long opportunity, would be breaking above that. Do watch shorts though as well. You know, obviously if we start breaking down and we break back down below this 34.70 area, which is right here, 34.72. If we break down below this 34.70 area, that could certainly be a signal that it's rolling over to go short again coming, you know, at the end of the week. So, you know, you've kind of almost got a bracket order here where you could look to go long off of a break of 34.90 and short off of a break of 34.72. But if you're trading with the trend, which is what we want to do, we want to trade with the bias, the market bias is long, and that would tell us to look for long opportunities. The other way to go would be to look for pullbacks as we pull back down to the 34.70, 34.72 area. Look for a bounce off of that and see if we can bounce and continue higher. Of course, the other way is watching for price to make lower highs and lower lows, and then playing a breakout of the lower high on that. So a couple different ways to come at the market, but you know, again, trading with the market bias, we want to be in a long position. Of course, always with every trade ever, use a stop loss, because you know we're going to be wrong. We're at no point ever in time, ever in history of ever, is anybody ever right about the market all the time. You know, you're just not going to be. It's part of it. We have to kind of figure out what our direction is going to be, trade that direction, but you know, manage our risk. And if we manage our risk, everything else comes out in the long term. The issues, you know, blowing up accounts and having big drawdown, all those things happen because of failure to manage the risk. You know, so let's you know, pick the levels you want to trade from, pick the direction you want to trade from, pick the way you want to trade, and do that. And you know, if things don't work out, be prepared to get out of that trade and wait for the next great opportunity. Don't overtrade. Don't, you know, markets like this can get choppy as well. I mentioned that the other day. You know, we're coming up to the election. The election's in, what, like a week and a half? 15, 18? Like 18 days is the election. We could also see just a lot of chop leading up to here. So, you know, it's really at this point very imperative that we pick the best opportunities for entry, whatever that might be. You know, I'm not here to tell you enter at this price and do this. You know, I'm here to teach you, and there's multiple ways to coming at the market. No one way is the right way. All are valid. It comes down to how you manage risk and how well you stick to that plan. So again, you know, I talked about some different ways of looking at this, you know, but breakouts, with bounces, with pullback style trades. All of those could work and none of those could work. You know, we have to be prepared to manage the risk. If you manage the risk, everything else takes care of itself in the long run. The problems come up when we fail to manage risk, or we overtrade. We try to, you know, obviously chase the market, trade emotionally, things of that nature. And that's why we do these morning updates, so we can pick the levels we want to trade from, figure out that plan, have a marching order going into the day, and that's what we're going to execute. And if we do that consistently, we're golden. If we don't, things blow up, right? So anyway, let's get back to it. So what we're looking at here, bias is long. So you know, we're looking at, you know, potential breaks. So if we go north, we break above 34.92, we can look for longs. We can look for a bounce off of 3470, 3472. I would say though, if we break down, if it does move down, and we break down below that 3470 area, close down below it, that would be the potential of this rolling over, which would be counter to the bias that we're seeing here. All right, crude. What's up with crude? Crude's back into a long bias again. It's been chopping around quite a bit as well, but it is back into a long bias. And we're kind of sitting at a key level as it is right now, but 41 would be the next area up here. So if we break 41, which has been an area where the price has just been struggling right here. So if we break above 41, we can be looking for buy opportunities on a break of 41. So if you're looking for a breakout trade, that's the direction of the current market bias, would be above 41. If it starts breaking down and we break down below 40, 60, really 40, 50 down here, we break below 40, 50, that might be the signal things are rolling over and looking short. Not saying to go short, I'm just saying that would be the point where you might just say, hey, I'm out of this. The market's rolling over and it's no longer trading in the direction of that overall bias, which is a long bias right now. You could look for bounces back down to 40, 60, 40, 70, look for bounces off of that to go back north as well. Or until this, trips over, we could be watching for pullbacks to look at breakouts of lower highs. So if we make lower highs and lower lows, we could be looking to break back into the long position as we break above that lower high. But do have a point, if this starts to roll over and we get down to this, 40, 70, 40, 60 area, even if the moving averages haven't crossed, that might be the opportunity to say, hey, look, we're struggling down here. I'm not really willing to continue looking at long opportunities. I need to just step back from the market for a minute, let it figure out what it's going to actually do. Again, if the S&P really rallies, if the indexes rally, along with the Dow and NASDAQ, Russell, if those rally, that could pull crude up with it. But the same thing, by the same token, if there's suddenly something that occurs here that pushes these off a cliff, our indexes suddenly roll off a cliff, that could pull crude down with it. So just be aware of that. We are coming into a holiday season. There's going to be increased, I shouldn't say gonna, because we don't really know. But this is the season where we do typically see some increased travel. And then of course you've got, with Christmas coming up, increased buying in goods, which will necessitate a need for fuel consumption. So that could push oil higher anyway. But a lot's kind of riding over here on the uncertainty in the market around A, CARES Act, B, the election. So there's a lot of unknowns still here as well. All right, coming over here to gold. To gold, we're in a mixed bias. So the 4 hour is still short. The 4 hour bias is still short. The 30-minute bias, however, is long. So, for gold, we're in a mixed bias right now, which would just be telling us, hey, let's sit on our hands. Let's wait for the market to determine what it's going to actually do, and then we can make a decision around that. All right, so I think we've hit it all. We've talked about Forex. We're going to wait until after news. We need to wait until that high impact news occurs and gets out of the way before we can figure out what currency pairings we want to put together. Although there is opportunity leading up to right now, you have quite a few currencies that are far below what their typical ranges would be. So if we see some divergence between those, the USD and the euro and the CAD, the pound and the USD, there definitely is room with where we've currently moved versus what the overall daily averages are. So there's opportunity, there's potential opportunity there. Doesn't mean it's gonna move, but there's certainly opportunity there left in those ranges. But we need to see what's actually moving post news. For the indexes, S&P, we've got long bias. Crude, we've got a long bias. We're looking for a long trade. We talked about a couple of ways to go at those. So, and then gold, we're in a mixed bias, so we're not gonna do anything there. All right, so that's it. I'm gonna leave it here, let you guys get on with your day, and we'll talk to you later. Have a good one. Bye.